Hello everyone, welcome to part 3 of the trading plan. I am going into quite some detail, that's correct. I wanted to show you guys in part 1 how you and how I set up goals. I have to know in what direction I'm going with trading. Like I said, do you want to pay the rent and you need a couple of hundred a month, or do you want to be a millionaire and do you need a compound return of 1,000, 2,000, couple of thousand? That's it's a different plan to trade. Um, we've been through that. Last week we looked at how to look at the charts. I zoomed in a little bit on price action, on moving, on trend lines, on horizontal lines, just to show you guys that by doing the proper analysis on a chart, you can see where price will bounce, where price will continue to move, where price will struggle for a bit and then move on. So you don't have to worry that price will turn around. You just know, there's a resistance level. Of course it's going to turn around a little bit, and then it's going to continue, and once it breaks that level, you know, okay, it breaks the level, so we have some more continuation. Also the price action story about higher highs, higher lows. Of course, those are the fundamentals. So you know what your goals are. You know how to look at the naked market, just the price action, just play around with horizontal lines, support, resistance, trend lines, everything. Another thing we can add to the trading plan, of course, are indicators. Just to sum up a few, the moving average, the MACD, Bollinger Bands, the RSI, Relative Strength Index, and the Fibonacci Retracement tool, which is not, to me, is not really an indicator, but you know, it's a tool. To me, it's a tool to use in trading. Let's continue. First part, moving averages. Let me bring up a chart so you guys can see how I look at moving averages. Alright, here we are, US dollar, Singapore dollar. Let's add the indicator. I said moving average is the first one we will look at this week. Then we add it over here. You can play around with the time frame. Do you want a 9-day moving average? Do you want a moving average based on the close of every bar? Do you want a 20-day moving average? You can also play around with the 9 and the 20 and maybe the 52-day moving average. When those lines cross, it gives you also information that when the short-term moving average gets crossed, the mid-term and the longer term, then of course everything is turning around. But when those lines cross, that's also an indication that there's something going on in the movement of price. For now, let's keep it simple. This is just a moving average. You can see it run around the line. Of course, it follows the movement of price in this case. Let's switch to the daily to maybe get a clearer pattern. Yes, we do. As you can see, price was in a indecision area. Was it going up, was it going down, was struggling around the moving average. Over here it got broken, and you can see that the moving average is actually acting like some kind of trend line, and prices, every time it comes back, here's a nice example, respecting the moving average and continuing. Me as a trader, I look at this and it gives me information. I never just trade the moving average, but we'll get into that later. This gives me an indication of how I can use how I see this trend. Here it breaks, so this is, to me, I would be watching this. What happened after this? Of course, to me, price action, all those things we talked about last week, is way more important. So no need for me to exit this trade once it breaks back up. We see a very strong move again, and we see it's respecting the moving average a couple of times. Over here we had a correction. It even broke this moving average, and we are now with some very strong momentum trying to make a move back up. That's just for now. Again, trading above the moving average. So you can use the moving average to confirm, to see if trend is actually moving in a certain direction. And you know, it's moving average. You know, it says it's a term on itself, that the average of all the price moves is in this case moving above the average. that was the moving average. Let's move on. The relative strength index, this one I use quite often. The relative strength index says something about the strength of the move. As you can see on this picture already, once price is moving to the upside, we can see that price is the relative strength shows us the same. Some pullbacks, we see it over here. Then we have a strong move. We also see that there is strong strength in this move, a pullback, and then an even stronger move to the upside. What you can see over here is the zone where people call it overbought or oversold. That's the same thing, but just on the downside. People say when things are oversold, they are coming down. Personally, I do not look at the RSI like that. I don't think that is the right translation when I see that happening. But again, we'll get into that later on, because when we are starting to combine the price action, the trend lines, everything, then we and the indicators, then the picture comes a nice whole, and the bigger picture tells me a story, not just an indicator. Let's switch up to the chart again. Let's remove this previous indicator and let's get in a relative strength. Here it is. Over here, yes. Well, like I said, the relative strength actually shows you the thing you already see on the chart, which is nice, of course. Let's go to the 4 hour and see if we can find a place where I see things I like to see. Well, I see it a little bit on this one. We see that price is moving lower. When I draw a trend line, you can see it moving lower, and when the moving average would be in here, we can see it moving lower. Lower highs as well, and then we see this happening. Price broke the previous highs, broke this very important zone as well, and is bounced pretty aggressive off this level over here. So it looks like price is turning. Again, we need more information to confirm that, but how I look at this is a high. We can see a low, I'm sorry, this is a low, we can see it over here. Then price moved back up, came down again, but that's kind of this story. But then we see another low, but what we see on the RSI is a different story. we see it from over here, that the momentum, the strength of this move is turning around. We see that the RSI is showing higher lows, while we are still seeing lower lows on the price. So this is, to me, is an indicator that price, the move down is changing, it's turning around, and that is actually what's happening over here. So it's nice to spot this in an early stage. Then you start watching this move, and I think when this one broke, we already had a nice entry to move over there. Now this one broke as well, so maybe this is a nice trade for next week, but this is not my weekly analysis. This is just to point out what price does in this case. And then the next one are the Bollinger Bands. I put in a picture of MetaTrader as well. I do my analysis on TradingView, like you guys know. Sometimes I get the question how I trade. I just use MetaTrader 4. This is a nice example. I put in the Bollinger Bands over here. You can see what the moving average is a part of the Bollinger Band. You can see here that price broke. We moved to the downside. Price broke again. You know, I explained what the moving average tells you, but adding Bollinger Bands, you can see that once price is consolidating, so there's not much momentum, you see the Bollinger Bands move closer to each other. That means that not a lot is going on, but once price really starts to move, you can see the Bollinger Bands expanding, and you can see the way price is, the direction price is moving, in this case to the downside. Price is moving very strongly against the outside of the Bollinger Bands, which tells me that this is actually a very strong momentum, because it's touching the band here. It moves away from the Bollinger Bands, starts flirting with the moving average again, touches the outside and comes back in. Of course, indicators always tell you what already happened. In this case it's the same, but it gives you some picture on where price will be going. Yeah, you can see the touches of the bands indicate momentum, and on the other side they also indicate that price is turning here, but around the Bollinger Bands we can see some interesting resistance, because price doesn't just move very aggressive through those bands. So it gives you some more information on where price is at. You know, is it extremely moving to the downside or extremely to the upside, or is it just consolidating? It gives you a nice picture on where price is. Next one, the Fibonacci Retracement. Let me pull up the charts again, because this to me is a very nice tool. I remember when I started using this, I was quite amazed actually, because let me show you on the chart. Wait a minute. To show you this, let me just pull up the Adidas chart. This was the low, the extreme low. This was at that time the extreme high. So that connects the Fibonacci. Price moved all the way over here and then started in a very huge sell-off to the downside. As you can see, this was the first level, which is actually a level where price struggled a couple of times, but moved through there pretty easy. Then it came across the 38.2. Well, you actually see that 38.2 was a very important zone to break when price started to come back. The 50%, you see over here as well that we have had some trouble, and then you see it's almost exactly on the line. 61.8 retracement. It was done. Price turned around, moved pretty aggressive, and we are back in an up move again. Those levels really give you great insight on where price is going in a certain correction. I remember Facebook was in the same correction by the end of 2016. I watched those levels, 61.8, move was over. I started looking at Facebook, and you know, it's consolidating for a couple of weeks, I think it was, and then it started moving again, and it's at all times high right now. So you had a move, a 1 or 2 month correction, and then just 1 month, bang, Facebook is back on track. It's very interesting to see what Fibonacci can tell you. Another one is the MACD, as you can see on this picture. That's an indicator that's also giving you some information on what the trend is doing at the time. As you can see here, this line in the middle tells you if we are trading above or below that level, which tells us are we in an up or a downtrend. As you can see here, price was consolidating a little bit, but overall it was moving up. So the moving averages were trading above here. Those bars indicate the distance between the moving averages and the middle line, which indicates that the strength of the trade. The bigger the bars, the bigger the move, the bigger the momentum. You can see here on the price chart that price was turning around, it reversed, it moved down for a bit. We can see here that price is moving, crossing those lines, and actually moving in a downward momentum. So there was a small downtrend. What we can see as well there are 2 lines. One is the 12-day, and the other one is the 26-day, and I think it's the 9 and the 12 that we are seeing here. When those lines cross each other, we are already getting a sign that what we can see here, this one was crossing the red one, and there was actually, after that we saw that price was turning around. Here there was some indecision, of course, but once the line crossed back, we started to see that there was some momentum shift as well. Here of course it came back for a sec, but eventually it moved through. There are indicators. Not all scenarios will always give you the exact information on how to enter the trade. Like for example here, it's not, when you see this, boom, enter a short, it's not like that. We have to make a combination like I show in my last slide. This is to me the key success factor in trading. Let me move back to the chart again to show you guys how I look at this. last but not least, the combination of using tools and of course the combination of using them in a way that the price action, the trend lines, everything is in. I'm gonna try to do a real quick analysis of this trade using everything. The weekly chart, multiple time frame analysis, horizontal lines. This to me is a very important level. Once this breaks, of course, we are actually in a downtrend again. This is an important level as well. You can see here resistance got penetrated, but maybe it was support. For now, it's important to watch this level. And of course, we got the line above here. But for now, this is it. We can draw on the Fibonacci, the extreme. From there to there, we see that price actually bounced exactly on the 38.2 level, which is nice, which gives us an indication that we were in fact in a correction, and it's obvious that price bounced over here. I can also draw in a trend line over here because this is quite an obvious level. Let's just do that. A little bit to the yes, like that. For now, I'm going to remove this one. Move to the daily chart. Exactly. This level, we saw it already, it bounced. I'm going to draw in another horizontal line because this one is very important. It's important that this level breaks, because if it doesn't, we are starting to see a head and shoulders pattern like we've discussed last week as well. We get the shoulder, neck, shoulder, neck, second shoulder, and continuation. We don't know yet, but important level to watch. Also over here we can draw in a Fibonacci level, but if I would have drawn it like this, which means that we are actually, this is a setup for a downtrend, because we broke that level. If you do it like this, we can see that 61.8 was the retracement, which makes sense. For now, those are the lines. I can draw in a horizontal line as well, but it's not really that. No, it is actually 1, 2, 3 touches, and a fourth one over here exactly meets the retracement level. It exactly meets this horizontal support line, and it meets a nice trend line. So this is great. I think when I draw in a second one, from here to here, we will see some trouble around this area as well in the future, but let's not make it too complicated for now. Let's start using those indicators. I personally, you can use the MACD, you can use the relative strength. For now, let me show you, I prefer the relative strength index, and we also use moving averages, but just put in the Bollinger Bands because there is a moving average in that one as well. So what do we see over here? Let's zoom in a little bit to the 4 hour. Like I pointed out in the video, I see some divergence over here, which is nice. Which is actually giving me a sign that this move will start to turn around. There is also on the 4 hour a nice level that we have to draw. That's over here, and it already got broken with a close above with a strong candle. So we are in an interesting move here. We were trading overall below the moving average. When we zoom out a little bit, you can see that we are actually trading below the moving average pretty convincing, and we just broke it. This is another sign that something is going on here. And the Bollinger Bands, it was trading outside the lower band. Right now moving average broke, and it's trading on the outside of the band. So something is definitely happening here. It looks like the Bollinger Bands tell me that price is moving up strongly. The moving average is telling me price broke, so we are back to the upside. The RSI tells me we're seeing divergence already, and actually that happened, and price turned, and we see that momentum is going up as well. Also, we saw on the Fibonacci levels that it retraced. It's quite obvious levels, and we got us a setup here. I didn't know this before I started this video, but this is an interesting one to see next week. We use two kinds of indicators, actually three, when you use the moving average and the bands, and of course this one, another tool, Fibonacci, we used it as well. This is how I look at the charts. I draw lines. I want to know where price is. I want to know when it's turning. I want to know when I can get in using eventually great risk reward, because that's what it's all about, people. I would like this one to pull back a little bit, you know, or retest this level maybe. This would be a nice setup to enter. Of course, I want to get out once the moving average breaks, for example, or I will, you know, maybe we wait for another low, then enter, and then let it ride to determine my exact stop. We can see there's a lot of potential to the upside. I would not do this, because why should you take a one-on-one trade? So the stop loss is not really obvious just yet, but this is a nice setup to me. So let's close out for today. I hope my part 3 of the trading plan with the integrated charts as well will give you some nice information, and I really want to help you guys become successful traders just like me. I love doing this. I really enjoy doing my analysis. I even enjoy the money I make from this even more, and of course the freedom is amazing. Let me help you guys. I'm just here to help. I don't want money. I don't want nothing. I'm here to help. Contact me. Please send your comments below this video. If you're looking for a great broker, check out my bio as well on Instagram or YouTube. I work with quite some brokers, and FX Pro for me is the #1 broker. Every year it becomes the #1 broker, because everything they do, I traded different brokers, and these guys have really low costs, great communication, a lot of tools, even an auto trader system if you want to automate your trading for a little bit. So many features. So I'll talk about FX Pro in more detail in another video, but for now I hope this video helped you, and have a great day.